and dull this knife using this grinder. It doesn't even have the power to cut this orange. Just run the knife through the edge of glory, 2, 3, 4, and bring a dull knife back to life. You could spend up to $160 on a knife sharpener, or you can get the Edge of Glory for just $10.99. But it gets even better. Call now and you'll get a complete 3-piece knife set with your order. Use them to cut, peel, dice, or fillet just about anything. They're a $20 value, and they're yours free when you call. But we're still not done. If you order now, you can double this entire offer. That means you get 2 Edge of Glory sharpeners and 2 knife sets, a huge value, all for just $10.99. And remember, order now and find out about free shipping.
Call 1-800-657-7905 and get your Edge of Glory. But hurry, we're giving away a special offer on a second Edge of Glory and the knives with today's orders. So call 1-800-657-7905 and find out about free shipping. That's 1-800-657-7905. Call now.
Let's level the playing field. Take the privileged investing tools of Wall Street and make them simple, intuitive, and available to all. Distill all that data. Make information instinctual, visual. Introducing Trade Architect, TD Ameritrade's empowering web-based trading platform. Take control of your portfolio today. Trade commission-free for 60 days, and we'll throw in up to $600 when you open an account.
The Closing Bell is sponsored by TD Ameritrade, where a smart game plan starts with smarter trading tools.
Welcome back. Hello, David Asman.
And
Look,
Ms.
I have a
Raymond,
friend.
Substitute right here next to us, Cheryl Casoni, who is carrying on for, I don't know, you've done about 8 hours today?
Yeah, something like that.
Well, the
It's all
market
good.
is in triple digits, and actually, we're looking at gold. First of all, Lauren Simonetti taking a big pop. It's up $80 in just 30 days.
It certainly is. There's the bell, guys. You print more money with QE3. That's good for gold.
Okay, well, again, everybody's been trying to parse these statements by Ben Bernanke. At first, it was seen as a big downer. The market went down. Then it began to come up again. Then it went down. And look at this. It just got off at triple digits again. This market is having a terrible time trying to figure out what Ben Bernanke is trying to say, what he means to say about another round of money printing, which is probably exactly what Ben Bernanke wants.
Well, when the bell rings, everybody, the action really begins. St. Louis Fed President James Bullard going to give us his reaction to Ben Bernanke's speech today. Plus, former governor of the Federal Reserve Board, Wayne Angel, tells us what Bernanke should have done.
You love Wayne Angel.
I do,
He really
actually.
knows
He's a good
the
guy.
inside. Also, Ed Lazier, if you're trying to know the inside of the president, he is the former chair of the President's Council of Economic Advisors. He's here to explain exactly what Mitt Romney's economic plan is. Is he for rate decreases across the board? We're not really sure. We didn't get an absolutely clear idea last night. Perhaps Ed Lazier can clear it up for us.
All right, but first, everybody, we're going to tell you what drove the markets today with today's data download. Stocks posted their third straight month of gains as Federal Reserve Chairman Ben Bernanke says that central banks are ready to act. All 3 major indices closed August in the green, with the Nasdaq surging more than 4%. 9 of 10 S&P sectors ended August higher, led by technology and consumer discretionary. Oil jumping nearly 2% today to $96.47 a barrel. Oil finished up nearly 10% for the month of August. That is its biggest percentage gain since last October. And consumer sentiment climbed to a 3-month high in August, rising to 74.3 from 72.3 in July. Price discounts and low interest rates boosted buying. David?
All right, well, it is a guessing game. Trying to figure out what Ben Bernanke is up to. By the end of this hour, I guarantee you will have a clear idea because of these guys who are going to straighten it all out for us. We have Lincoln Ellis. He's in the pits of the CME. Tony Zambigala is going to tell us what area of the market he says is the buying opportunity of a lifetime, and he has some ideas about what the Fed was trying to tell us. And former Fed member Wayne Angel telling us why QE3 is no longer on the table. Let's start with Lincoln Ellis. He's in the pits of the CME. And Lincoln, we always look to gold to see what's happening as a barometer of what the Fed does or does not mean. Gold was way up today. It's up about $80, by the way, over the past 30 days. Is it time to sell, or does it still have room to grow?
Well, look, the reaction today across the markets was the same that we saw in 2010, the same that we saw in 2011. to this speech and to this kind of policy action. Up, 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 up across all three major asset classes. Easing means support in the bond market. It means a lower dollar, which correlates right to that gold price, and it means higher equity prices as margins can continue to go with support from the Federal Reserve.
You know, Lincoln, one of the things that I've been watching closely has been this relationship between the dollar and the euro, and surprisingly, the euro has frankly held up rather well this week against the dollar. Do you think that has to do with anything with the fact that we're expecting some stimulus out of Europe before we're going to get any stimulus from the U.S. Fed?
Well, today that stimulus was definitely present in the U.S. bond markets, widening out that spread between U.S. 10-years and German bunds, and that is what has been keeping the euro up. And the euro's really, it's been not really been up. It's the dollar that's been down, and that's anticipation of what we saw this morning from the Federal Reserve Chairman. We expect that trend to continue until the ECB meeting on the 6th of September.
All right, let's bring in Tony Zabigala. Stay with us, Lincoln, if you can. Tony, you were actually happy by Bernanke's statement because you thought it indicated he was not going to do another round of QE3. Now, contrary to that are the comments of Charles Schumer. They just came out, and I'm going to put them up on the screen. Charles Schumer says it is clear that Chairman Bernanke, as he looks at the economic indicators, believes it's time to prime the pump, to buy more bonds, to print more money. He should not let any political backlash deter him from following through and doing the right thing. Is that just spouting off political rhetoric, or is he onto something?
You know what? I really believe that Bernanke did not come out with the quantitative easing today. I'm relieved he did not do that because all that's going to do is hurt the dollar. We need a strong dollar in this economy because consumer spending makes up 70% of GDP growth, and printing money out of thin air is not going to solve the problem.
Okay, but Tony, let me be more specific. I really want to put you in a corner here. What gave you the indication from what Bernanke said that there wasn't going to be another round of QE3? Because a lot of people in the market thought it indicated there was going to be another round.
Well, he did leave the door open. I would hope that he doesn't do it. He left it so vague that I really can't see him doing another quantitative easing round.
All right, Tony, let me ask you this. One of the things that we've been watching, obviously, out of Europe has been the sense that the Eurozone could, in fact, at some point, maybe later on this year, kind of get itself together. Maybe that's when Greece exits the Euro. That's one thing that's been talked about, Tony. Do you think that there are actually investment opportunities in Europe right now?
I think that if Draghi pulls out a U.S.-style quantitative easing process, that we could see the buying opportunity of a lifetime in the Eurozone if he pulls something like that off. However, you got to get 17 countries to react all in the same motion.
By the way, the bet for that is the FEZ, the Euro stocks. That's if you believe that Europe is off the bottom. By the way, we did go through an earnings season where we very often beat on expectations, but you say don't believe those beats because in fact it's all about the bottom line, not about the top line. That is, revenues were not coming in as they should have been.
Right. I mean, companies are coming in with 70% earnings, but no one's talking about the companies coming in, they're beating revenues by only 40%. The only reason they're beating the earnings is because of cutting costs. They're missing the revenues and not focusing on growth. If they're not going to focus on growth, I think we're going to be setting up for a disappointment in 2013.
You know, Lincoln, speaking of growth, I mean, what are we looking at now? Potentially 2% GDP for the second half of 2012. You've got China that's got 8% GDP. Lincoln, what's it going to take to get the economy back on track in the next year? Is it Washington? Is it New York? What is it?
It's time, and a couple of points here that Tony was making that are worth expounding here right to this U.S. growth story. If the Federal Reserve does actually do or embark on a quantitative third easing, we will lose that purchasing power in the dollar. We will reignite a commodity bubble that will eat into the middle class America's purchasing power, and that will ultimately erode both revenues and top-line corporate growth, and that's bad for overall U.S. growth. And that, I think, is ultimately why we're going to be stuck at this 2 to 2.5% growth rate, not only for the next year, but really for the next 2 or 3 years, because an economy that's gone through this big cathartic contraction, it takes time. It doesn't take monetary policy, although that helps. It doesn't take fiscal policy, although that too would help. Thank you, Congress. But it really takes time.
Okay, Tony Zabigala. Lincoln, we're going to check in with you in just a couple of minutes to see how the S&P futures close. Gentlemen, thank you very much.
You bet.
Well, Fed Chairman Ben Bernanke delivering his highly anticipated speech at Jackson Hole today. The chairman not announcing any new form of stimulus, but stating that the Fed would be ready to act when necessary. Joining us now for a Fox Business exclusive is Wayne Angel, former governor of the Federal Reserve Board. Wayne, good to see you. Thanks for coming in. Now, Bernanke made some interesting claims today. He claimed, citing some other data, that in fact the Fed's bond buying and money printing so far, QE1 and QE2, actually stimulated the economy to the tune of 2 million jobs, suggesting that it added 3% to economic growth. But when you look at the figures, growth has been declining steadily since this QE process began. So how can he make the claim that it is actually stimulating the economy when the economy is slowing down?
Well, he can make whatever claim he wants, but whether it's valid is another matter.
Well, is it, Wayne?
It seems to be. Go ahead.
Is it a valid point or not?
No. No, it's not valid. The Fed gains its power by winning the position of the guardian of price stability. And if they do that, then they've got power to ease. But when the Fed puts all the marbles into trying to get the economy to grow, it really is not very effective. And here again, let me say that the problem that we have is that Bernanke was a better student of the monetary errors in the Great Depression than he was regulatory. He doesn't seem to understand that regulatory policy went pretty well in the Great Depression. I mean, Roosevelt closing the banks up and then getting them all examined and opening up and say they're good now. But somehow or other we're caught in a regulatory monetary contraction that's very unfortunate.
Well, Wayne, still today, though, he reiterated, and we've heard these statements before from him, from the minutes, from the Fed statement itself, from Bernanke itself, that he was ready to act. Is there one thing that you think could happen in the U.S. economy or the European economy that could cause Ben Bernanke to pull the trigger on quantitative easing?
Well, I don't think he really wants to pull the trigger on monetary easing because I think he knows that he's not going to get much bang for the buck. And so I think he'll be much more happy if he can avoid it, but he wants to say, we've got that out there.
By the way, Romney's been asked specifically time and again by reporters and in debates whether he thought Bernanke is doing a good job. And he said not only does he think he's not doing a good job, but he would not renominate Bernanke. Would you?
Well, if Romney asks me that question, I'll be glad to supply the answer to Romney.
Well,
but Romney has got so many things figured out so well that this economy of ours is going to grow in 2013 a lot more than people are anticipating.
But does Bernanke deserve another term?
Yes, in a way he does, but in a way he doesn't. He doesn't in regard to not seeming to understand that regulatory messing up the banks stops them from lending. And so he's got all those excess reserves out there, but the banks are not lending them. And we need a Bill Seidman in there to provide a cover for banks to make more loans.
Wade, one of the things that Mr. Bernanke has been very vocal about, he has not shied away from the fiscal cliff. He's been very negative when it comes to the word Congress. Do you think that his words carry any weight in Washington now?
Well, not too much. I mean, I think Chairman Bernanke should stick to monetary policy and not have all this advice in regard to fiscal policy. because I think we're going to have an election that's going to change all that, and this economy is going to do just fine.
But when he buys Treasury bonds, does he not begin to participate in the political process? That is, does he not provide cover for free-spending politicians who are spending money they don't have?
Not really. Not really. I mean, they're able to spend money they don't have without the cover of the Federal Reserve. So that's already there.
Wayne Angel, former governor of the Federal Reserve Board. Wayne, thank you very much. It's nice to talk to you.
Good to see you, Wayne. Thank you.
It's a delight to be with you.
Appreciate it. Well, the highly anticipated speech by Fed Chairman Ben Bernanke has come and it's gone, and guess what?